Welcome to Stock Market Today, your market briefing with actionable insights on stocks, bonds, crypto, and the events moving markets. Let's get into it. SpaceX is positioning for what could be the largest IPO in financial market history. According to Reuters and Yahoo Finance, the company is targeting a mid to late 2026 public offering with a valuation reaching $1.5 trillion. That's trillion with a T. To put this in perspective, this would position SpaceX alongside the world's most valuable public companies, comparable to Alphabet and Amazon at their peaks. The timeline matters for traders. Multiple financial outlets, including the Financial Times, reported a potential June 2026 IPO date, which puts us roughly 4 months out from a potential listing. As of today, February 25, 2026, SpaceX has not filed official SEC documentation confirming these plans. This creates a critical uncertainty window. The lack of regulatory filings means the timeline could shift, but market speculation is building momentum across aerospace and satellite communications sectors. Let's talk valuation mechanics. The projected $1.5 trillion market cap represents a massive jump from SpaceX's December 2025 private market valuation of $800 billion, according to Fortune and Yahoo Finance. That's an 87.5% increase in roughly 2 months of private market activity. This appreciation signals strong institutional appetite and sets the stage for what analysts are calling a potential $50 billion capital raise. If realized, this would surpass Saudi Aramco's 2019 offering as the largest IPO in history. Share price scenarios are critical for positioning. According to analysis from Forbes and A-Invest, projected share prices range from $400 to $1,200 per share, depending on market conditions and investor sentiment. This 3x spread reflects the difficulty in valuing a company operating across multiple high-growth verticals, including satellite communications, launch services, and emerging space technologies. The wide range also signals volatility potential in early trading sessions. Revenue growth is the core thesis. Financial projections cited by multiple sources suggest SpaceX revenues could jump from $15 billion in 2025 to $24 billion in 2026. That's a 60% year-over-year growth rate. This acceleration is driven primarily by Starlink's satellite internet expansion, which represents the most scalable revenue stream in the portfolio. Launch services provide stable cash flow, but Starlink's subscriber growth is the multiplier that justifies premium valuation multiples. Starlink is the revenue engine. The satellite constellation has achieved global coverage and explosive subscriber growth, though specific current subscriber numbers remain unreported in public sources. The service's economics are transforming from capital-intensive infrastructure build-out to recurring subscription revenue with improving unit economics. This transition from CapEx-heavy to cash-generative operations is critical for public market investors evaluating free cash flow trajectories. Starship's reusable architecture is the competitive moat. The fully reusable launch system dramatically reduces cost per launch compared to traditional aerospace incumbents like Boeing and Lockheed Martin. This cost advantage translates directly to margin expansion in commercial launch services and enables the capital-efficient scaling of Starlink's satellite deployment. The technology represents a structural advantage that competitors are struggling to replicate at scale. Competition is intensifying. Blue Origin completed New Glenn rocket test flights in early 2026, according to industry reports. This represents meaningful progress in the heavy lift launch market. Blue Origin's operational capability reduces SpaceX's monopolistic positioning in commercial launch services, though SpaceX maintains significant advantages in flight frequency and operational experience. The competitive dynamic could pressure pricing in government and commercial contracts. The broader space economy context matters. Industry analyses project the space economy will reach $1.8 trillion by 2035. This 10-year market expansion provides the addressable market thesis supporting SpaceX's valuation. However, market share assumptions are speculative. SpaceX's ultimate capture rate depends on execution, competitive positioning, and technology adoption curves that remain uncertain. Defense and government contracts provide revenue stability. SpaceX's integration with national security space missions and government agencies creates a base revenue layer with lower volatility than commercial markets. This government relationship also provides strategic positioning advantages and regulatory tailwinds. The defense vertical is less susceptible to economic cycles, which matters for valuation models assuming long-term cash flow predictability. IPO access for retail investors remains unclear. Forbes analysis suggests indirect exposure through space-focused ETFs may be more accessible than direct IPO participation. Institutional allocations typically dominate large IPOs, leaving retail investors with limited allocation opportunities. Post-IPO secondary market access depends on share price stability and liquidity development in early trading sessions. Capital intensity is the primary risk factor. Space operations require massive ongoing investment for technology development, manufacturing capacity, and infrastructure expansion. This capital intensity pressures free cash flow conversion and limits near-term profitability. Analysts comparing SpaceX to high-growth tech companies must account for the fundamentally different capital requirements of aerospace operations versus software businesses. Execution risk is substantial. The ambitious 60% revenue growth target and premium valuation multiples leave little room for operational missteps. Technical challenges with Starship development, regulatory delays, or market softness could derail growth projections. Execution risk is amplified by the company's simultaneous pursuit of multiple complex initiatives, including Mars colonization, infrastructure, and potential AI integration projects. Mars colonization funding is part of the strategic thesis. Reports suggest public market capital is essential for funding Elon Musk's interplanetary objectives. Private equity alone cannot meet the estimated capital requirements for Mars infrastructure. This long-term strategic vision is either a visionary value driver or a capital allocation concern, depending on investor perspective. The dichotomy creates valuation dispersion in analyst models. Market conditions will determine timing and pricing. The broader IPO market environment in 2026 significantly influences SpaceX's public offering success. Current market volatility, competing mega-cap offerings, and investor sentiment toward growth at premium multiples assets all factor into final pricing decisions. A deteriorating macro environment could force timeline adjustments or valuation resets. Regulatory environment adds uncertainty. Space commerce regulations continue evolving, and policy changes could impact both commercial operations and defense contract opportunities. International regulatory frameworks for satellite communications and launch operations remain fragmented, creating compliance complexity as SpaceX scales globally. The market impact extends beyond SpaceX. A successful IPO could catalyze broader investor interest in space-related investments and influence valuations across aerospace and satellite communications sectors. Space-focused ETFs, aerospace component suppliers, and competing launch providers would likely see correlated price action. The wealth effect from a successful listing could flow into adjacent technologies and early-stage space ventures. The information gap matters for positioning. Several critical aspects remain unclear from public sources, including detailed financial performance metrics, specific underwriter selection, current private market transaction data, and regulatory approval status. This information asymmetry creates risk for investors relying on speculation rather than official disclosures. The absence of SEC filings means reported timelines and valuations remain unconfirmed. The bottom line for traders: SpaceX represents a potentially transformative investment opportunity with significant upside potential and substantial risk factors. The combination of technological innovation, scalable revenue models, and ambitious growth targets creates a binary outcome scenario. Success depends on execution of business objectives, competitive positioning maintenance, and sustained investor appetite for high-growth aerospace investments at premium valuations. The $1.5 trillion valuation and $50 billion capital raise numbers position this as the most significant wealth event of 2026 if the IPO proceeds as speculated. The $400 to $1,200 share price range provides tactical entry point considerations for investors evaluating position sizing. The revenue acceleration from $15 billion to $24 billion represents the fundamental performance metric to watch as the company moves toward public markets. For multi-asset traders, the SpaceX IPO creates indirect exposure opportunities across equities, options on aerospace ETFs, and potential volatility plays around the listing date. The announcement timeline and SEC filing activity will be critical catalysts for positioning in related securities. This is a developing situation requiring close monitoring of regulatory disclosures in official company communications. That wraps your market intel. Trade smart out there. For deeper insights and real-time analysis, visit capitalcopilot.io.